And we are live. We are coming at you live with our live video trading series. Today we're looking back at 2017 at how Bitcoin mainstreamed cryptocurrency the entire year in one single chart. So here it is. Bitcoin started 2017 at $923 with a 90% share of the cryptocurrency market. It was the only cryptocurrency with a market cap over $1 billion. It had a $15 billion market cap. So the entire space had a market cap of under $20 billion. Now imagine that. Think about that for a minute. Today, the cryptocurrency market cap is $500 billion. And there are 32 or 33 cryptocurrencies with a market cap over $1 billion. So we're going back to the beginning of 2017 right here and take a look at the price of Bitcoin right over here on the left of the chart, $923 and a 90% share in the cryptocurrency space. At this point in time, the public still thinks of cryptocurrency as dark web, as the currency of the dark web. Scary, scary stuff. So this is a big, big year for cryptocurrency in general, and Bitcoin did it. So let's take a look back at the year. May 20th, Bitcoin passed the $2,000 mark. So it had doubled in value, and it also increased to greater than 4 exahash per second. The hash rate increased to 4 exahash per second. Now, I'd be lying to you if I told you that I understand what that means. I have no idea what that means. Actually, I have an idea. It has to do with uh, how many blocks are solved with cryptographic math puzzles and locked into place in the blockchain in a given period of time. So that was when it exceeded 4 exahash per second. That was a big deal. And now it's at more than 15 exahash per second. So for those of you that follow, those of you who have a little bit of the geek in you and you follow the tech specs of the Bitcoin network, it's now at greater than 15 exahash per second. Now, in the New York agreement was reached in May, and that was a settling or, you know, apparent settling of the scaling fees, transaction bottleneck, and the debate over the whole issue with Bitcoin was just growing too fast. So the New York Agreement had two phases to it, and the first one was called SegWit, which was implemented August 1st. And SegWit is just segregated witness, and what that means is it's a type of data compression in which the addresses and the transactions are separated so that not everything has to stay on the blockchain. And it makes things work on the blockchain a lot quicker. So the agreement was to implement SegWit in August and then increase the block size of Bitcoin in November. So SegWit was implemented in August, but at the time there was enough dissent within the community that Bitcoin Cash, which was a hard fork, that means a completely separate currency that also uses the chain, the original chain, as its historical chain, forked off of the Bitcoin network. So Bitcoin Cash was born August 1st, the same time that the SegWit data compression was adapted. And you can see in the price here the scaling debate over the fees and transaction bottleneck got really hot, and price dropped from a high of 3,000 in June to a low of 1,700 in early July. So that had a significant effect on price. Now, once the SegWit protocol was implemented, then within weeks, Bitcoin almost touched 5,000 right over here. So it basically hit 49.80 in the week of August 28th. So it almost hit 5,000 after the SegWit implementation, and everything was going great until a lot of just negative press started hitting the news. And as an example, Reuters, there was a Chinese ICO ban, and Reuters said that that was just the start of a Chinese crackdown on cryptocurrencies, which turns out to be true. A lot of the exchanges had to move out of China, and now they're reopened in Hong Kong or Japan. A lot of the major exchanges, but also there was a lot of talk in the U.S. Bankers were talking down Bitcoin. Now, trash talking Bitcoin became kind of a Wall Street hobby. And Jamie Dimon, the CEO of JP Morgan Chase, the largest investment bank in the world, said Bitcoin won't end well, and he called it a fraud. So that had a significant effect on price. And you can understand why banks are afraid of Bitcoin, because Bitcoin bypasses banks. It eliminates fees and cross-border transaction exchange rates and remittance fees and uh, a lot of the fees that banks take out of people's money as it moves around the globe. Bitcoin eliminates those issues. So uh, here, all that trash talk by bankers dropped the price back down from 5,000 to about 3,000. Okay, it's hit a low of 29.75 the second week of September. And after that, it rebounded nicely, and this showed how resilient Bitcoin is, even in the face of bubble talk and trash talk and all that, all those deputy downers of doom and negative Nancy's and all those people. It still was pretty resilient, and it would be hard to overstate just how resilient this market has been to negative press. But here, it rises from the ashes of the bubble talk and the banks and the Chinese ICO ban, and it runs up to a high of near 8,000. But then the SegWit 2 kerfuffle comes into play, and that was everybody was waiting for the second phase of SegWit to be implemented, and that was when Bitcoin block size was supposed to double. Okay, there was two solutions were agreed upon. It was a compromise. Some people thought, well, we should compress the data and take some of it off the chain, and some people thought, well, we should make the blocks bigger. So they compromised and said, we'll do both. But they only did the first one, and the second one never got implemented. So in November, when the fight over SegWit became an issue and SegWit was not implemented, the price dropped pretty dramatically down to from a high of near 8,000. Let's see, yeah, near 8,000 to a low of 5,500. So that was kind of a shock, and that was the SegWit 2 kerfuffle. And then again, Bitcoin revealed its significant resilience in the face of negative talk by popping back up and once again, Phoenix-like, rising from the ashes. And over the next, by November 28th, by the end of November, it blasted through 10,000 and really never saw 10,000 again. If you look at even the low of the recent drop was 10,400. So it blasted through 10,000 November 28th and stayed there. And now is when Bitcoin became mainstream. Okay, CME, the Chicago Merc, and the Chicago Board Options Exchange both announced futures contracts, and that brought institutional money into the cryptocurrency space. The Wall Street Journal around that time ran a headline that said, Bitcoin mania, even grandma is in. Okay, so that's how mainstream Bitcoin had become. And boom, it almost hit 20,000 the week of December 11th. On some exchanges, it traded over 20,000, and here it's showing at 19,697 or 19,891. So hit 20,000 the second and third week in December, and then just poof, plummeted. Okay, and there are several clouds on the horizon that people were talking about Bitcoin. First of all, it had a huge backlog, 250,000 transactions, very high fees in the $30 range, significant delays on the network. It was supposed to be 10 minutes for a Bitcoin transaction, and it could take hours with the backlog of transactions. But by the end of 2017, cryptocurrency was mainstream. That's the key. That's the big thing that Bitcoin did in 2017. It brought the cryptocurrency space into the mainstream. And it can all be summed up in that Wall Street Journal headline, Bitcoin mania, even grandma is in. And at the end of 2017, Bitcoin is trading at $15,000, so about 15 times where it started the year. But more importantly, it's brought $500 billion, that's $500 billion, into the cryptocurrency space. Think about that for a minute. We began 2017 at a total market cap in the cryptocurrency space of less than $20 billion. And now the total is more than $500 billion in the cryptocurrency space. So you're talking about a huge difference. There's a ton of money has flown into the space, has has flowed into the space, and cryptocurrencies are mainstream. Now Bitcoin has lost its dominance. It's less than 40% of the total cryptocurrency market cap. But again, the mainstreaming of cryptocurrency cannot be denied. Bitcoin was second only to Hurricane Irma in Google search 2017, and grandma's buying it on her iPhone. So what else is there to say? But 2017, not the year of Bitcoin, not the year of some other cryptocurrency, but the year of the mainstreaming of cryptocurrencies in general. And that is our live trading video series for today, how Bitcoin mainstreamed cryptocurrency in the entire year of 2017 in a single chart. I hope this information will help you make better cryptocurrency investment decisions.